Really like your latest story, Inez, the rise of social trading, how the internet is changing investing. Take us through this.
Yeah, so basically, I took a look at these brokerage platforms, and so many of them call themselves social investing platforms. And I spoke to eToro, I spoke to Public.com, the COO there, and I also spoke to a popular investor. She's a popular investor on eToro. So what people are doing now, especially young retail traders, they are using social media with investing, and these platforms are taking advantage of that and offering these social media tools and also investing so they can copy trades from other influencers or traders that are successful at what they do. They can see what their friends are trading. And a woman that I spoke to, she's 33 years old. She has a background in crisis management, in psychology, and she trades on eToro. Now, eToro in the US right now allows crypto trading, and it'll allow equities later on this year. But so she's heavy on Ethereum. She's heavy on Cardano. She basically believes in these crypto assets. And she told me, look, I do feel a responsibility that other people are copying my trades, but this is something that I would be doing for myself. So basically, if you're copying someone else's trade, you would think that they are doing it in their best interest. They are trading their own money. And so if it's in their best interest, it's something that's in my best interest as well. She learned from other popular investors, and now she is a popular investor on the platform that others follow.
Hey, Naz, what are regulators doing in terms of paying attention to this? I mean, we know that in general, retail investing has been, meme stocks have been getting more attention from regulators, right? And then I imagine this would be sort of lumped in with that as well. So are regulators paying attention? What are they saying in terms of whether they want to take a closer look?
They're definitely paying attention, and as you mentioned, the whole meme stock saga basically brought about this idea of gamification, right? And you had Robinhood earlier this year that took away its confetti, the little confetti that it had on its app on first trades. Basically, I spoke to Amy Lynch, and she is a former regulator from the SEC, and she said that you can expect to see more regulation coming down the pipe when it comes to social investing, maybe in the form of disclosures. That's the easiest way to kind of regulate. The SEC did take in comments throughout 30 days on the idea of gamification, this idea of this digitalization engagement practices, DEPs as they're called. At what point does a broker dealer sort of encourage a trade with these sort of DEPs, with these gamification type of technologies? So that is what the SEC will be taking a look at. These technologies, do they encourage trading, or are they simply totally agnostic? That's one thing. As far as the other side of this, of copying traders, if these are non-professionals, these are your regular average Joes that just happen to be very good at what they do, their communication with retail investors, with traders on the platform is just their communication. It's freedom of speech. You can certainly do that. So there's no issue there. The idea of gamification, that is what the SEC is really taking a hard look at. And they'll be releasing a paper soon that will look into some recommendations in this area.
Great reporting as always. Inez, thanks so much.